So today we're going to be talking about a few different things, right? And primarily it's all around tax credits. And, you know, we're going to talk about why, but, you know, tax credits are incredibly valuable if you can qualify for them much more than deductions. And we'll talk about why that is. And there's a number of tax credits that can fit childcare businesses depending on their circumstances. And, one of the things, and I was talking about this with one of my colleagues earlier today, one of the things I find most distressing, frustrating, is that many times tax preparers don't take the time to check. So if you hear about these tonight and you think you may qualify, it's something that you would likely want to bring up with your tax preparer. Ask them, right? But very often, just because they don't tell you doesn't mean that you don't. And we'll also talk about some other supports later in the conversation for some additional coaching if you do have further questions and want to kind of go into your personal cases. So why is it that I get so excited about tax credits, right? And you hear a lot about tax credits in the news and stuff because people get very excited about them. It reduces a deduction on the one hand, which is what we usually think of like an expense, right? So you, in your childcare business, let's say you have a personnel cost or you purchase a desk, that's going to reduce your taxable income. A credit essentially is taxes paid on your behalf, right? So in other words, if you think about, let's take an example, you have $1,000 deduction, right? So whether that's a personnel cost, an item you purchased, whatever. And you're in the 22% tax bracket, excuse me, that's going to save you $22 in taxes, right? So that's good. I take it, right? But if you have $1,000 credit, that saves you $1,000 in taxes because essentially it is treated as if you paid another $1,000 in taxes ahead of time. So you could see where, 22 is great, 1,000 even better. So that's why we get excited about tax credits and kind of hope you do too, as we have this conversation. So we're going to talk about a few different tax credits tonight. One are pandemic related tax credits, some for offering staff benefits, some for hiring staff, also the employer provided childcare facilities and services tax credit, which is another kind of like, it's kind of interesting because in some cases it can apply to you. In other cases, it may be one where you want to tell employers in your area about them. And then tax credits for homeowners. So pandemic related tax credit. So there's two that we're going to talk about. And one is the employee retention tax credit. I'm just curious if you can if it's easy for you to do, by hitting the emoji for a raised hand. How many people have pursued the employee retention tax credit? Okay, not seeing anyone. That's fine. Oh, one. Okay, good. How many people had employees during 2020 and 2021? W-2 employees. Okay. Annette did. Okay, we're getting a few other people. Sheeta, Summer, great. So the employee retention tax credit is actually a legacy program. So it was in place in 2021 and 2022. I'm sorry, 2020 and 2021. And it was a credit that was given as an incentive to businesses to be able to keep retaining their employees. And the way you are eligible for it is one, a reduction in your revenue, and that's a reduction comparing 2020 and 2021. I'm sorry. Yes, 2020, 2021 to 2019. So you would compare and see pre-COVID how much of a reduction you have, and there are some triggers that the government set. Another way to get it is if you started your business during the pandemic. So after February 15th, 2021, That's another, I'm sorry, 2020, that's another opportunity for it. And the last opportunity is if you had a government order that in some way forced you to either close or impacted your business significantly. And there are some measures around that during COVID to a point where it reduced, in this case, your capacity by 10% or more. The reason why we get excited about the ERTC, and you see a lot of people getting excited about it, is that you can qualify for, in 2020, for 5,000 per employee, up to that, up to 21,000 per employee in 2021. The caveat here, because I'm sure a lot of you have seen the ERTC in the news, two caveats I'll give you, right? So one is there's a lot of people out there who are charging anywhere from 15 to 25% of the credit to do this for you. And that's a lot of money. It's not that complicated to pursue it. There are some tricks to it. I'm not disagreeing with that, but it's not worth that level of funding. I mean, if you think about in the state of Texas, where we've done a lot of this, it's like roughly, or I'm sorry, average of 227,000 per center. That's a fairly hefty, amount, 15 to 25% to take out of that. So number one is, we want you to be very careful about who you approach with this. One of the things I'll show you at the end is Decal is offering free consultation on this. We've done this with many of them. We don't charge you anything. We're not going to charge you a percentage. We can't. We're not going to anyway. And we can help you determine if you are eligible free of charge. So if this is something you're interested in, this is something that we can directly help you with. The other thing I would say, and I know, Cami, you're the only one who's pursued it. Maybe some other people were a little shy and did pursue it. Because of all of these kind of disreputable individuals who have been trying to get these credits, there's been a lot of misinformation, and many times a strong encouragement of people to apply for the credit who really didn't qualify, unfortunately. And because of that, the IRS has a voluntary disclosure program that's running until March 2024. So it's actually March 22nd, 2024. So it's not even the end of March, right? You only have a few weeks on it. This voluntary disclosure program allows you to return 80% of the funds. So you get to keep the 20%, which likely went to this firm in a fee. You get out of taxes, additional penalties, and interest on it. But that is an opportunity to say to the IRS, yeah, I made a mistake. So we're also offering free coaching on that as well. I'll tell you how you can find out more about that. But if some of you did apply and you've been kind of awake at night saying, did I really qualify? That guy, it felt like when I talked to him, it was a little too easy. That's something we can help you with. But if you do qualify, again, it's a major opportunity. And it is one that is likely not to be here forever. Whoops, I just hit that by accident. My apologies. In fact, it's supposed to start sunsetting in April. However, the current tax credit bill that a lot of people have been talking about that's currently passed the House and is in the Senate, that would eliminate the ERTC permanently. So just know that if you have ever been curious about it, want to find out for free, if you can apply for it, now's the time. Families First Coronavirus Response Act. Now, this is a really interesting one because, again, it's retroactive. This is something that applies to 2020, 2021 through September of 2021. This one is if you have W-2, so with the employee retention tax credit, it's only W-2 employees. With the FFCRA, it's W-2 employees or sole proprietors. So if you're a smaller center, if you're a family care provider, this one may be for you. In this case, what had happened was the government essentially had a paid sick leave program. So you were able to get up to 40 hours of paid sick leave. And there were two tranches. They covered from March 13th, 2020 through March 31st, 2021. Then it reset and you had it again April to September of 2021. The relief here is if you had to close your business or couldn't work because of having COVID, quarantine, taking care of a family member with COVID, or having to school a child at home because your school was already closed. So if you homeschool, unfortunately, this doesn't qualify you. But if you did have a child who was at home with you for a period of time and you couldn't work, you couldn't run your daycare because of that, that's something you may want to think about. And it's important to note it doesn't have to be every day. So, for example, we had a family care provider who her family covered her child when he was out of school every day except Friday. But Friday she had to close, and every Friday she took care of him. She was, like many of us, home with our kids, educating him. And on those Fridays, we were able to claim the credit just for those Fridays. So no, it doesn't have to be, I was the only one taking care of right? It does only apply to your child, to be clear, because I know like in many cases, providers were, of course, caring for other folks' children um, who, were out of school, but it only applies to your children. Again, this is another one free of charge. We can help you determine if you qualify if you're not sure. Again, it also covers your W-2 employees, even if they're no longer with you. So even if you had a W-2 employee who left, this may be an option for you. There's also some credits out there for offering staff benefits. And I know this is one that is becoming increasingly interesting, right? Because as we know, we just had Ms. James. I guess I missed out because I had COVID in 2021, October 21. Yeah, unfortunately, they ended it in September. And that was, I know, very disappointing. We had a number of people who, because there was a wave of COVID that clearly you were caught in that happened right after it closed. And it was really upsetting because we had a number of providers who could have been eligible 30 days earlier. So I do feel your pain. I know we were dealing with that nationally at the time. So there are a number of tax credits that, again, can help you afford staff benefits. And one of those is the small business healthcare tax credit. So this reimburses you for half of the contributions you make towards employees' premiums, as long as you cover 50% or more per employee. So if we have an example, right? You have an employee whose monthly premium is $235, you pay 50%, $717.50, you'd be eligible for a tax credit of $58.75, which is not bad, because that translates annually into $1,410. And so this is something that, of course, helps reduce that cost, right? So essentially, in this case, this scenario, we're looking at about 25% of that cost coming back to you at the end of the year in your tax return. And again, it's treated as taxes paid. So it's better than a deduction. Now, you still get to deduct, by the way, the rest of the benefit cost. So you're saving some money on that as well as this. And that's what we're going to talk a little bit about here, right? So, excuse me. If we take this example here, right? We have Happy Apple Childcare, right? They have a health plan for their employees to participate in. They pay at least 50% of the benefits. So they're eligible to receive the credit. Their costs total $2,500. They can receive the tax credit for half their costs, right? Which is $1,250. Additionally, they could deduct this as a business expense, right? And they can do the full cost there. So that's $2,500. So that's going to save them additional money. So again, I'm going to have an illustration of how this plays out with retirement, because that's a particularly fun one. But you can see where this adds up, because now you're still getting that deduction. So you're saving, as we talked about, deduction, not bad. Tax credit, better, right? But you're getting both here. And with a few of these, you'll be able to get both. So if you are thinking about offering healthcare, if you are offering healthcare, this is something to take a look at. So, again, you want to maximize those savings, right? Claim the credit, deduct your expenses, get your staff benefits, helps you remain competitive in this environment. Another one is the Secure Act. So setting every community up for retirement enhancement. I honestly have talked about Secure 1.0, and there's actually a second one that was uh, approved last December, Secure 2.0. I don't think I could have told you what the acronym meant. So that's a nice one. But this is a great program. I really like the Secure program. And what kills me is this is another one where so many providers in the states we work in, because we work in multiple states, have told me that they started a retirement program for their staff. And when I asked them, "Oh, did you get secure tax credits?" I don't know what you're talking about. And you find very, very often, I would say almost every single time, the tax preparer didn't do it. And it's not uncommon. Most of them won't do it, which is a whole nother question. And it's honestly, it's not a very complicated form. It's one page. But this is something to think about. And again, if you're offering retirement benefits, definitely something to think about. Eligible employers can claim a tax credit of 500 to 5,000 for 3 years towards setup and administration fees associated with a SEP, simple IRA, or 401k. So in other words, those are some of the better, more popular, if you will, retirement options for small businesses. So you could be getting that off the administrative fees. So that's maybe your time. If you have, let's say, a finance person who's helping you with this, some of their time. It could be, it includes not only the time that you're setting it up, but like, let's say you spend an hour talking to your staff about the program, and then another hour the following week on helping them set up, their own accounts. That would count towards this money. Additionally, if you add automatic enrollment, which is pretty much anyone nowadays, like it's hard to find a business plan that hasn't, there's an additional $500 tax credit that you get for automatic enrollment, which again, this rapidly adds up, right? So let me give you an example of why I get so excited about this particular program, right? So, and by the way, this credit also Secure also extends to you as an individual. There's an individual credit as well, which depending on how much you make per year, you can get up to $1,000 in a tax credit. So in this case, Kashana is a family, and these, by the way, are taken from actual cases that we've worked on. So I'm not that smart to just randomly make these up. The names aren't real. Names are other people. We mix them up. But I want to make sure you know that this isn't just something where I got my calculator out and said what would look good. But rather, let's talk about a real case, right? So Kashana's family care business sole owner and sole proprietor. She made $38,000 in the previous tax year, so 2023. She put $2,000 into a simple retirement account. And by the way, we do a whole training on retirement. You can access that, just so you know that that's like another option if you want to learn more about some of these things that I'm talking about. But just know that that's out there. But in this case, she put the $2,000 in because of her income level, right? And remember, as a childcare provider, your income is based on your line 31. So it's your profit. So after your revenue, after your expenses. So a lot of family childcare providers, yeah, they're making more than 38,000 on revenue. But by the time they take out all their expenses, it's not uncommon to find a family care provider who's clearing 38,000. She put $2,000 into a simple retirement account. In this case, this is how much she spent, right? $2,000. That's great. It's going to have compound interest. You could watch the video on retirement. But I'm a big fan of retirement because it does add up quickly when you start adding into it. But the deal is that first she's going to get $1,000 tax credit for her savings. That's awesome, right? So that's already lowered how much has really come out of her pocket at the end of the year. Plus, she can still deduct the amount that she put in. And with a simple retirement account, because it's a business retirement account, that comes out of her business. So before she has to pay self-employment tax, anything else, it goes away. So in her case, by the end of the year, she's really only put out $454 to get $2,000 in that retirement account. And I'm not saying that, Kashawn isn't going to feel $454. It's not pleasant, right? But it's not a bad deal. If I told you that I could get you, essentially 4 times, actually more than 4 times your investment in something, you'd say, gosh, that's a pretty good deal, right? And again, this will build over time for her in her retirement. And we also have the slide in Spanish as well. For those of you who are Spanish speakers, you could see kind of how this plays out. Another example, and this one's a center, right? Estelle contributed 5% of the salary of each employee, so $1,560 per employee, for a total of $23,400. So Estelle, she put the money out there. She has to stay competitive in this environment. She's making sure that she's keeping her employees happy. It hurts, but she's getting it out there. Now, the new benefit overall cost her $25,950, right? So that includes, as we can see here, not only the contributions she made, but she had spent some time setting things up. She had to, spend some time talking to her employees about the forms and such. So her total, when she calculated at the end of the year, was $25,950 that she had put into the program. However, because of these credits that she receives, 2 things are going to happen. One, she's going to get back $17,550 in credits. That's a lot back, right? On top of it, she's still able to deduct the portion that she paid. So that's going to save her another $5,709. So in this particular case, Estelle was able to give this $23,000 benefit for $26.91. So in other words, we said the deal earlier with Kashana was pretty good, where she was every $1 she put in, she was getting 4 back. Well, with Estelle, because of Secure 2.0, about every $1 she's putting in, she's getting, almost 10 back. That's not a bad deal. And again, I don't want to make it sound like I'm a salesman or something. There's no commitment. As Estelle continues through the program, she may hit a point where she says it's not sustainable anymore, because these sunset over a course of 5 years. So it goes lower after the first 2 years and it starts to go down in terms of the amount of credit. So she may say, I can't afford it after a few years. But at least for those initial years, you can see where this becomes a very affordable benefit for you to potentially offer your team. And again, I'm just going to pause for a minute, let our Spanish-speaking audience see the slide in Spanish as well. I know Emily's translating. Thank you, Emily. So again, it's a great opportunity with the Secure 1.0 and 2.0. You have this opportunity to not only get that tax deduction, which is good, but the credit, which is great. And again, I can't say it enough. I've said it multiple times, but this is one where many times your tax preparer is not going to say a word, which is really disappointing. And we could talk about what a bad thing that is, but it is what it is. So it may be one that you have to ask about. And like I said, it's good for 5 years. So if you started your employee retirement program of any kind in the past 5 years, I'd ask your tax preparer about it. And it may even be worth doing an amendment to try to get that money back. So here's another one that I think very often, again, tax preparers aren't talking about with you, and that's the work opportunity tax credit. So in this particular case, the government is trying to give you an incentive for hiring staff that belong to certain groups that they feel could use additional support in getting a job. And the credit is only for new hires, right? You must request and receive certification that belongs to that they belong to a targeted group. So this is typically, it depends on the state, and unfortunately, I don't know offhand on Georgia, but typically this has to happen within 30 days of hiring. So I'm going to share the groups with you in a minute. But if you suspect that somebody you are going to employ belongs to one of these groups, ask them within those first 30 days. Better yet, put it on your application. It's perfectly legal to say, you know, we participate in the work opportunity credit. Do any of these conditions apply to you? You know, and so that's something to think about. And certainly you want to do this early, because the states are very diligent about it. And if you pass one day, I do know one provider who just missed it by a couple of weeks in their state, was in a different state. And that was that. They just couldn't get it anymore, which was nice. I mean, they still, of course, did the right thing. It wasn't like they said, oh, we regret hiring them, we're not getting a credit. But what did happen was they unfortunately didn't get it. And to qualify for the credit, you have to complete Form 8850, which is request for certification. That's the one that goes to your state. Usually it's online now. The credit is going to range from $1,200 to $9,600 depending on the group and how much you're paying them. So that's not bad, right? Like for a hire you're going to do anyway. In many cases, you know, this becomes money that, again, better than a deduction, it's going to save you more. So what are some of these groups that we mentioned? One is long-term family assistance recipient, qualified recipient of temporary assistance for needy families, a qualified veteran. So if they're an unemployed veteran, they can be eligible. Qualified formerly incarcerated people, I know for, you know, childcare, that's not very typical that, you know, depending on your licensing, that you can. Designated community resident, vocational rehabilitation referral, summer youth employee. Now, this is interesting because this is only in opportunity zones. So these tend to be more vulnerable communities in your state. But if you are located in one of those communities and you're hiring a high school student, for example, to help you over the summer, this may be something that you can get a credit for. And again, part of what excites me about this program is that most childcare providers don't even know about it. And we know many of them are hiring from these groups. SNAP benefit, so what we used to call food stamps, you know, they're also eligible. SSI recipients eligible. And again, you know, qualified long-term unemployed individuals are also eligible for this program. So let me just quickly catch up on the questions. We're asked, could a SEP IRA qualify? Yes, it can. I love SEPs, by the way. That's a whole nother, we did as simple as that example, but you know, don't get me started on retirement because I'll just keep talking about that one. But I do love a good SEP IRA for a variety of reasons, and I'll talk your ear off at some point if you want on that. Ms. James, you didn't know about this. Yeah, I mean, it kind of kills me because, you know, unfortunately, we do see a lot of providers who, you know, are doing this anyway, right? So, you know, if you can get $1,000 for doing what you're going to do anyway, or $1,200 at minimum, it's not a bad deal. Now, this is another one that is kind of interesting because not only do most childcare providers not know about it, most businesses, which is what it is targeting, most employers have no idea, right? And what impresses me about it, are two things, right? One is there is a play on that employer side that could help you, and I'll talk more about how that works. We've actually worked with providers in Texas and in Virginia on this, and so there is a play that you can have as a provider to help with your marketing and sales, but there's also a play that you as an employer can have as well. So this particular tax credit is geared towards employers who are providing childcare either on site or off site, right? And the business can receive up to 25% of their related childcare expenses. So that could be anything from building a childcare facility or contracting with you, right? For childcare off-site. So it doesn't even have to be like you could be miles away, but if they're contracted with you and paying you, they can qualify for the 25%. They also get up to 10% of their resource and referral expenses, up to 150,000 a year. So when you talk to local employers about this, invariably, and again, I've done this in Texas and Virginia, their jaws drop because they had no idea. And for many of them, it doesn't necessarily mean a huge change to their business practices to qualify. I should also say, by the way, the tax form is one of the shortest forms I've ever seen in my entire life. It's almost ridiculous. So it's not a huge burden for them to do that. So something else to think about. So, and Annie had asked if we can get a recording of this class. Absolutely, it will be recorded. I don't know the details on how it'll be posted, but we can find out about how to get that to you. So to be eligible for this particular one, you either have to be having on-site childcare, right? Contract with a childcare program or contract for, I'm sorry, I have a Mac, so it does this like little thing. And I'm Italian, half Italian, so I always like have to gesticulate. So either you're providing that on-site care, you're contracting with a childcare program, or contracting for research or referral services. So the reason why I say this becomes really interesting for you from a sales perspective, and this is family care as well as centers, is a lot of times employers think that a contract means I have to have a contract with Annette and I have to pay her $1,000 a month no matter what. So if my employee goes on vacation, I have to pay her. If my employee leaves, I still have to pay her until I get that person replaced. It's actually not true. The contract can easily just cover the times that Annette is caring for that employee's child, right? So what we found in Virginia and in Texas, thanks Margaret for getting that in on the recording. What we found in both those states was two things would happen. One is childcare providers could approach local employers and say, did you know about this, right? And this is an opportunity for you. Or they would approach local employers where they already had multiple employees and said, what if we had some sort of contract that makes this suddenly become a tax credit for you? So it makes it cheaper for you. Maybe you help out your parents a bit. Everyone's happy, right? And it really does work. I mean, it sounds like, I think again, I'm kind of like little mouse happy. So it does really work. The other opportunity, and we did see this a fair amount in the pandemic, we're seeing it less now, but I think it is still an opportunity among smaller centers and providers. So this counts if you are it specifically says if you're a childcare provider and 30% of your enrolled children are employees and you're doing this, you can be eligible for it. So in other words, let's say you have 20 slots, right? I know that's like really small, but it's been a long day and I'm keeping it to easy math. Okay. So, if you have 20 slots and 6 of those are kids of employees, you can be eligible for this credit. So suddenly 25% of those costs associated with taking care of those kids comes back to you in a credit. And again, what's fascinating is this isn't like a loophole where we say, look, if you squint this way, it'll work. It literally says, if you're a childcare provider, here's how it works for you. So if you are a smaller provider, typically, like we don't find this with really large centers, it usually doesn't work for them because there's too few employee kids in any time. but as you know better than I do, there's often a bumper crop of kids, like kind of waves of them. And we've seen this a lot where a center will suddenly have a bunch of between siblings and there'll be some newborns, there'll be a number of kids. This may work for you. But even if it doesn't, this is a good marketing and sales opportunity for you. And again, this just talks about this being able to share the information about this credit with businesses. It's a win-win for them, especially if they're already sending, families or have families that are within your facility. This becomes a way to just reduce their costs. So let's talk about credits for homeowners, and this is particularly for family care providers. But if you're an individual, of course, these are things that you may want to consider as well. You can support clean energy through the Inflation Reduction Act. This has expanded tax credits for solar panels, water heaters, heat pumps, HVAC systems, windows, doors, appliances, and more. It really does add up. It does differ a little bit by state. And actually, it differs by who is your utility company, believe it or not, because sometimes they kick in additional money for it. So it's hard to say it's exactly XYZ every time, but they are significant and they do add up. And especially if you're going to have to replace, your heating system, your HVAC system, it's worth looking into this because the tax credits can add up because very often, not only they're federal credits, but they're state credits in some cases as well. And in this case, it's 30% of the efficient improvements that you make throughout the year. Maximum credit's $1,200. The clean energy credit is a 30% credit on the cost of certain systems that use solar, wind, geothermal, biomass, or fuel cell power. Mostly for many people, that's going to mean solar. But if you were thinking about solar, if you're doing solar anyway, this is a great thing to do. By the way, if you're a home-based provider, don't forget, you can use your time space to deduct part of your solar panel costs, right? So now you're getting that credit, you're getting that deduction, right? Deduction good, credit's great. But if you're thinking about solar panels, this is how it adds up. Same thing for energy efficient, like an HVAC that you got. If it applies for the credit, you're getting the credit, but you still get to deduct part of that under your time space. And if you not familiar with time space and your home-based provider, we have trainings on that too. So, definitely, check locally because typically it's tied to your actual utility company. And so that will differ. I know we had one question before I open it up even further. Oh, here it is. Sorry, I stopped the share and it moved the notes over. So I was like, and then it moved. And this person just said this anonymously. If I put money in a SEP IRA as a sole proprietor, family, childcare, learning home, what tax credit could I get from that? How would it reduce my taxes? So if you put 3,000 in a SEP, how would I see that my taxes be affected? So let's bring up that slide again for a minute. I do so enjoy that slide because it makes me so very happy because I love, I talk about it a lot, right? But what we're finding is through tax education, not just tax credits, but we can also, and I should share that, by the way, forgot to do that. I'll share how you can get extra help free of charge through the state with us. But we're finding on average, we can find $7,600 per provider for mitigated taxes. So that's not deductions again, right? It's not deductions, that's money reduced from your tax bill. So I always get very excited about this because to me, this is a great opportunity to really increase your compensation. We talk a lot about increasing compensation and you all deserve more, but we also know that that's a hard slog in this policy environment. That's not a criticism either way. I'm just saying there's a lot of things that people need to fund and not a lot of money chasing it. So in the meantime, it's great to have this opportunity. So to answer this anonymous question, you can get up to $1,000 in this credit. You can also still get the deduction. In your case, what is going to affected is your overall income will affect how much of this $1,000 you can tap, because it goes down as you make more money. So in that case, we would need to look at, what is your overall income after all the adjustments, or your adjusted gross income. So that's after your deductions, after the standard deduction, how much were you making? But it could be up to $1,000, plus you'd still be able to deduct the business expense as well. And for you as a sole proprietor, that's an even better deal, because it's something that you're going to be able to do what they call above the line, which is a fancy way of saying you take it off your business expenses, so you're not paying self-employment tax. Just a few things real quick before I open it up to more questions. I want to make sure that you have this. These are some of the things we're offering, 100% free of charge. We're never going to charge you. These are through the state. DeCal has been kind enough to fund these for you to help you. And one is we're doing small group studies. If you hit this QR code, that'll take you to the registration. We go over financial foundations, recruiting and retaining staff, mitigating risk, sales and marketing, and also how do you grow your business and grow your revenue streams. We also have coaching on all of those topics as well. So if you have questions that are just one-on-one, maybe you felt a little uncomfortable asking tonight, maybe it's really involved, right? Those are things we can answer free of charge. The last thing that I would encourage you to do is take a look at this tax education. Free of charge, like I said, I'm not going to say like, can guarantee you 7,600, but this is what we find on average. We do this around the country. And this can be anything from, I want you to just take a look at last year's taxes. I want to talk to you about where I am right now. What should I be talking to my tax preparer about? Or how should I prepare my taxes? To, I have a very specific question. Do I have to depreciate this, right? Or I'm a little concerned. I'm thinking of taking this item as a deduction. Should I not? Last thing, as I mentioned, ERTC, FFCRA, that's another opportunity we have. We can help you determine if you're eligible. I would strongly recommend taking advantage of this. We charge nothing to you. And if you're not 100% sure and you think you might be eligible, I would try it. Worst case scenario is I'm going to say to you, oh, Phyllis, I'm sorry, you don't qualify. Didn't cost you anything, nothing. If you do qualify, that might be found money. And like I said, especially the ERTC, there's been a lot of money there. Last thing I'm going to mention, DeCal also has a number of self-study guides that we've prepared for them. Like one is on retirement. There's, tax credits. There's others there that you can do self-study. So let me get back to the questions. The anonymous person said, thank you, you're very welcome. And again, happy to talk on that one-on-one. Margaret also put in the small study groups and reminded me, how could I be so silly? If you complete the small study groups, not only do you get credit, professional development credit, you can get a $300 stipend. That's not bad either. And by the way, I know that there were some folks who said, gosh, Gary, could you make the times a little bit better, especially if you're a home-based provider? So you're going to be seeing, if you do apply for this or want to get engaged with it, we're now offering evening times, we're even offering weekend times. I'm not trying to kill you, but that's like basically in reaction to people saying, gosh, it would be great if I could do this on a Saturday or in the evenings. So if you did look in the past and said, gosh, I just don't know, I can't really swing it during the day, just know that opportunity is there as well, and just let people know. And that's something we're doing our best to accommodate in those small groups. One-on-one coaching, same thing. If you need to do it at night, let us know, or on the weekend, and typically we can find an accommodation for that. So are there other questions we have on this one? I know it's been a lot of information. And you can feel free, by the way, at this point, you want to come off mute, you can. Margaret just put in the link to the Thriving Academy resources. Like I said, those are all self-study guides. So again, if you're unsure about some of these topics, or maybe you're sure of it. You just need like a little bit of like, am I getting this right? Check that out. You know, these guides can be really helpful and you don't have to meet with anyone and they're available 24/7. So if you're looking for something to do at 2 a.m. other than, you know, doom scrolls through Facebook, it'll give you something to do with your time. Thank you, Tashita. I appreciate it. That was helpful. Other questions, comments, thoughts? One, you can just come off mute if you'd like. Yeah.
Sí. Hice el curso, ya que estaba hablando, hice lo del grupo pequeño y me mandaron el certificado a las 4 horas, pero no, dijeron que después me mandaban lo otro, no sé si me lo mandaron o no, para los $300. ¿Cómo hago para averiguar eso?
Emily, is there a translation? I'm just waiting for Emily. My very limited high school Spanish is not that good. My apologies.
Sí.
Okay. Oh, okay. So it sounds like you're getting an answer. Excellent. Luan, did you have a question? Luan? No? Okay. Thank you, Tay. Thank you,
Wait,
Rusa.
wait.
Oh,
Can
okay.
you hear me now?
I can.
Oh.
I was like, okay, maybe she's gone.
I am not licensed yet.
Okay.
I'm on children, who you can hear.
Which
But
is great.
do you have a class or coaching about starting a small business?
You know, we don't right now. And, you know, this is something that's new for Decal. And I know they want feedback. And Margaret, I'll ask you to keep me honest tomorrow. Let's talk to Ross about that. Because I think that's something that could be really interesting and exciting. And, you know, they might not be able to offer it now, but at least it'll feed into the future.
Yeah.
Can I make a statement in regards to that?
Yeah, please.
If you go to your local SBDC, they are also there to help you. They can help you write a business plan, and have some startup things that will collaborate that you will need for the county that you're in, aside from what you'll get from right from the start.
Well, Annette, first I had to figure out what SPDC stand for.
Oh, SBDC is
B.
small SP, yes. Small business, I think it's Small Business Development Center.
Okay.
You know what I'm gonna do, Luan?
I'm here.
I put in my email address, which is Gary@civstrat.com. And if you email me, just email me like, you know, tonight or tomorrow. I'll get you the link for that. And anyone else who wants to have the link, I'll get you the SBDC link for Georgia. The state SBDC is actually part of our team. So I can also put you in contact with her as well.
Thank you. Appreciate it.
My pleasure. And Annette, shame on me for not thinking about them. SBDCs are a great resource. I saw Charmaine also mentioned it. It's been a long day, so forgive me. But they are an excellent resource for developing your business, building your business. So that's absolutely something we can connect you with. And by the way, anyone else who, you know, my email address. So if you have other questions, don't hesitate to shoot them to me. I'm always happy to answer.
Miren, la señora quiere poner un Family Daycare, la asociación PFCC AG, ellos les ayudan a organizar eso.
Excellent. And I did, and Emily, I'm so sorry. This is the second time I've done this to you. I tell everyone else you have to like pick a channel, then I forget to do it myself. And poor Emily, like every single time she's like, I saw the earlier one was, yeah. Yeah, I mean, if she emails me her information, and she can email it in Spanish, I'll have one of our folks follow up with her. Like she doesn't even have to worry about translating, just send it to me in Spanish and I'll know it's her. I should say my Spanish is functional enough where I could probably figure it out too.
Hello, Gary.
Hi, how you doing?
I'm fine. How are you?
Good, good.
Wonderful. I have a question about the ERTC.
Mhm.
I approached my tax preparer, my uh accountant about the ERTC program, and she pretty much discouraged me from it. Even though I was very interested in it, she discouraged me and said that the program was over and that people did not realize that even though you may be getting money back now, something about you have to pay taxes on it later or something like that. So I just, like I said, I wanted to take advantage of it. However, she made it seem like it wasn't a good thing to do. So do you have any words about that? I mean, is it still available? Can you still apply for it now?
You absolutely still can apply for it now, right? And you can apply for it, retroactively. So, without going into too many of the details, on this particular call, what you would do is you do an amendment to your 941, which is every quarter when you have employees, you have to send a form to the federal government that says this is how much we had that we paid out employees to, or paid out to employees, and this is how much we should be paying in taxes, and you amend that. So it is something that is still valid currently until April 15th of this year for 2020, and then it won't be, and then 2021 is you're still eligible through April 15th of next year. Now, as I mentioned, there's a tax credit bill in the Senate that got it's been a long day, that got passed in the House. It's in the Senate now. That would end the program because that's part of how they're paying for these new tax credits. So, there's, so it is still right now the law of the land. Might it be in a few weeks if the Senate passes that bill? We don't know. That bill is it's not clear where it's headed right now. A couple of weeks ago, I would have said it looked really good, but right now it's a big shrug. In terms of, the taxation that your accountant is referring to is the income that you would use for the credit does become taxable, but you're still ending up ahead of the game, right? So if you think about, I'm just keeping simple numbers here, right? But if, let's say, you had $1,000 credit, and again, you're in the 22% bracket, and that's what you're being taxed on, then that's $22 that you have to pay the government back to get 1,000. It's not a bad deal, right? The problem is a lot of times the accountants don't love to do amendments because they find it to be a pain, so they discourage it. What I would say is, and again, we're doing it either way, right? But what I would say is, follow that link, sign up for the ERTC coaching. We can let you know if you even are eligible. If you're not, might not be a big deal, right? You might look at it and say, I'm not eligible, no problem. If you are, then we might, talk about it with you and say, here's the pros and the cons of your situation, and it may be something you want to pursue. But like I said, I always recommend people do it. It's free. It can't hurt. We've done hundreds of these. So like I said, worst case scenario is, we say to you, no, unfortunately, you're not eligible. But at least you're going to get an honest shake on it, and you'll know either way.
Yeah, she also said that she did not know how to get find the forms that were needed to prepare this, the documents. So do you know where you get those forms from, or that's not
The
true?
941X, she should know.
Oh,
Like,
okay.
I have to say, like, I'm not gonna, Charmaine, has her opinion, which I think is great. I do think if she doesn't know what a 941 is or a 941X, there's problems. And I think she
Yeah.
does. I think she just,
Yeah.
a lot of them, the reason why they don't do it is they view it as a pain in the butt kind of thing, to be
Yeah.
frank. And
That's what I thought.
so it's easier to say, oh no, don't worry about it. Right. Oh, it's too complicated. And like I said, I would say meet with one of our folks. Worst case scenario, we'll just say to you, you can't do it. Like you're not eligible and you could rest easy. But if it is, then it may also give you something. A lot of times people go back to their accountants and say, look, these folks have done it. This is how I qualify. You may not want to do it, but you got to do it. Let's do it.
And I've gone on and did one of those tests and I qualify based upon that. However, she discouraged me.
Yeah, I would still sit down with one of our people. Unfortunately, and this is where the program has rightly gotten some bad press, is there's a number of people out there who have really been trying to get that 15 to 20% of your credit, like kind of fly by night places. And so I've seen the tests, I've taken the tests, and
Right.
a lot of times it's not what I would recommend, like is safe, and the IRS, is cracking down on a number of them. But that's why I said it's always good to meet with one of our folks, because again, we have no skin in the game. Whether you
Right.
get money or you don't, we don't make any money, so it's not in our best interest to, say, oh, everyone can apply, everyone. And that's what we're seeing now. And it's a real shame because one of our coaches actually was sitting down with a provider in a different state a couple of weeks ago, and she had applied, she got the money. This was right before the program was announced where you could send the money back. And she sat down with one of our coaches just to be sure. And she was like, no, like you don't qualify. And she already had, spent the money. Plus she had paid 20% to the company that did it for her. So now, thankfully, with this program, she could apply and at least she could get, she still has to come up with the money to pay the 80%. At least she won't have to pay back 100%. But like, it was awful because she just like dissolved in tears, and that's part of the problem we're seeing with some of these companies is they'll say anything to get you to sign. And Margaret just put that link in. Margaret, you're awesome. And Margaret just put that link in again for you. So Marjorie, if you did want to pursue it and learn more, again, free of charge, we'd be happy to talk with you. And it may just be that, like I said, you go back to your accountant with more information.
Okay, could you post that again for me? I didn't get that to write it down. The
So
contact information.
it's in the chat. It's in the chat. There's a link right there.
Thank you.
Crystal, I'm a new owner. Do you recommend a private account or private? I'm not sure what you mean there, Crystal. And if you want to come off mute, you can.
I'm sorry, I was multitasking. I was asking, did you recommend like a private account or like a company or a firm or something?
Do we recommend one?
Like a daycare owner, yes. And I'm gonna be filing my taxes for the first time, and I'm not sure which direction.
Are you a sole proprietor? Like you're not incorporated, correct?
I'm an LLC, yes.
You're an LLC, single member LLC?
Yes.
Okay. I mean, so there's no one I recommend in particular. I mean, so here I'm going to get on my soapbox, and so sorry to like drag it out, but I've given up recommending accountants, tax preparers. Unfortunately, the way the industry is set, it's really about volume. And that's what we've been talking about tonight, right? Marjorie can't find out about the ERTC because it's, it's a little extra work. I don't want to do that. A lot of times you're not hearing about these tax credits because it's a little extra work, right? And what they want to do is they want to jam it through. I would recommend take a look at, and if you shoot me an email, you have my email address, I'll send you the link. Anyone else too, by the way, happy to do this. We do a guide annually on how to do your own taxes using TurboTax, and includes like screenshots. It tells you step by step what to do. I would strongly recommend it. We don't, again, this is all, by the way, free. Like, so I'm not like trying to lure you in, Crystal, and say, and for only $19.95. This is absolutely free. The Wisconsin Early Childhood Association pays for it every year. It applies to everybody, so it's applicable to Georgia. I would take a look at that first, because I think you're going to find it less expensive. I think you're going to have good outcomes with it. And you may be nervous. Take a look at it. If you don't like it, you could always find Tax Preparer. But I recommend taking a look at it first and seeing if you like it, if you feel confident enough to try it. What we find is providers who do prepare their own taxes are having really good outcomes. They feel good about it. The reason why we started really pushing self-preparation is because the IRS even says they audit it less, because they believe that electronically prepared taxes are more accurate and have better outcomes for the taxpayer. So they literally are less likely to audit you. Not that you have to worry, but I'm just saying, it could be a good way to go. I would say check it out. It's absolutely free. Like I said, email me, I'll send you the link. Anyone else too, I just don't have it offhand. Or I'd share it with you. Actually, wait, is that not true? Wait a minute. I might have it handy. Give me 1 second. Here it is. Look at me. I actually have it.
Nice.
All right,
Thank you.
here it is. So you could check that out. And, if it's something that might work for you, it's worth a shot. If it isn't, the best thing I say when it's trying to be a tax preparer is ask if they've ever done childcare taxes before. And especially if you're a home-based provider, I can't remember if you said you were. Definitely, if you're a home-based provider, ask them if they've done home-based provider taxes, not just one. You want to hear about 4 or 5 or 6 of them that they're actively doing. I say that because, there are special laws, literally, that only apply to home-based daycare and nobody else, tax laws. So specifically, time space is only applicable to you. There it goes again. And the second thing that's only applicable to you is being able to use the Child and Adult Care Food Program rates instead. And, we see this all the time. In fact, I was doing a tax session, tax training earlier today, which is probably why I'm a little frazzled, sorry. And one of the providers was saying, home-based provider, that her tax preparer recommended just taking the standard home deduction and moving on. Worst idea in the world, because you have such an advantage in doing time space for your deduction. So, Crystal, if you do pursue somebody, please do ask them. Ask other home-based providers in your area. Who do they like? Is the best way to find somebody.
I'm not home based. I'm sorry. I am a.
Oh, you.
I'm a.
Oh, that's okay. Okay, I misunderstood.
Same rule apply.
Yeah, but I would still say, even with you, ask how many childcare providers they've done. And again, still take a look at that self-preparation guide, and that may be a good way for you to go.
Thank you.
No, my pleasure. Other questions? Going once? Going twice? Okay. Well, it's been a pleasure. Thank you for letting me into your homes this evening in Georgia. And like I said, you have my email address. If you have other questions that come up, don't hesitate. If there's any of those topics that interest you, strongly recommend participating. All these services are free. And, as we mentioned, in the case of the small groups, it could even earn you $300. So that's not a bad deal, right? Get credit and get paid for it. Thank you again. Have a good evening. Thank you, Emily. Thank you, Margaret, for helping with tonight and making sure it was another great event for everyone.